Thought today we could talk about the housing market and what it might mean for the Reserve Bank. There's obviously been a lot of media coverage recently about house price gains and also the high level of auction clearance rates. It's not something that the Reserve Bank, in my eyes, would be overly concerned about. Indeed, it's something that they'd welcome. If we have a look at what's happened, Australian growth later this year really does face a significant headwind in the face of falling mining investment, and it's the non-mining sector that the Reserve Bank's looking to pick up the slack. And that obviously includes the housing market. Now, house prices have obviously risen strongly over 2013, but if we have a look at what happened prior to that, 2011 in Sydney, established houses actually fell in price, and there are only modest gains through 2012. It's that sort of environment that really doesn't promote residential construction activity. So, yes, 2013 was strong, but there's an element of catch-up in, from prior years when things were actually quite weak. The Reserve Bank would be encouraged by what they're seeing in the housing sector, and if we have a look at the building approvals, to the year ended January, they're up around 34%. So it's this housing construction that will actually assist the non-mining sector of the Australian economy going forward, and it's certainly something that the Reserve Bank will be relying on basically, because the exchange rate does remain elevated and it's not going to assist the other sectors that are exposed to currency moves. If we have a look at what's happening in terms of credit growth, it still remains quite weak. Credit growth was only around 4% higher in the last 12 months. What's happened here is households have used the opportunity from lower mortgage rates to pay down their debt more quickly. So the financial system at the moment is certainly more sound than what it was, say, 10 years ago when the household savings rate was quite a lot lower. The Reserve Bank will be aware of any increase in speculative behaviour. This is something that Glenn Stevens touched on recently. And you also have APRA that remind our financial lenders not to basically ease their lending standards. So with that in mind, I think the Reserve Bank's actually quite encouraged about what's happened in the housing market. If we start to see a supply response, in turn you wouldn't actually expect to see prices appreciate by too much further, but it is something that will assist Australian economic growth going forward. I don't expect to see the Reserve Bank tightening monetary policy anytime shortly, and certainly not in response to what's happening in the housing market.